So last cycle, it was in the low 40s and it stayed there basically the whole entire cycle. So this is what a typical altcoin season looks like. Bitcoin is outperforming altcoins in the beginning, and then once Bitcoin capital starts to get exhausted in a way, flows start to go into the altcoins, and that's truly what we saw in 2020, 2022.
We have a lot to unpack this month, and I'm joined here by our wonderful research associate, Matt. I think you guys have seen him a few times already, so not a new face, but a great person to have on the call to unpack everything that went down in April. So with that being said, I think it's worth doing a bit of a market update. This was, of course, the month where we had Liberation Day. I think we all know now what Liberation Day actually meant. It was the day where a lot of reciprocal tariffs from the US's side were announced, and also where some of the existing tariffs would actually go live. But I think what we actually saw was that the market had been quite choppy in the lead up to the Liberation Day. The tariff talks and the trade war topic had been top of mind from the administration in the US. And you can see that here with this chart as well, where there's been numerous developments under this topic. I know you guys have seen this already, so I don't want to spend too much time here, but I think it's worth keeping in mind that the market had been quite choppy in the lead up to Liberation Day, as people, I think, anticipated potential upheavals here. However, we of course had Liberation Day in early April, on the 2nd of April. And I think while some had hoped that this moment in time would bring some clarity to markets and would actually potentially reignite risk on sentiment in markets, I think Liberation Day itself actually led to more uncertainty in the near term, at least. I think there were questions around how these tariff or how these trade deficits or how these tariff rates were actually calculated. A lot of people pointed to the fact that these were potentially just trade deficits. And you can see that as well, that with the market reaction over here, that in early April, we saw risk on assets like the S&P and the wider stock market, and Bitcoin actually had a little bit of a downturn. But what I think is important to note here is Bitcoin had stayed actually relatively strong when we compared to the traditional equities. And on top of that, I think what was important to note is that a lot of these downturns on what happened in early April actually came outside of traditional trading hours. And that actually meant that Bitcoin and other crypto assets were the only tradable assets for a lot of investors. And to me, some people misconstrue Bitcoin as a very volatile asset, whereas to me, it's just the most useful asset. It's 24/7 tradable, and it really actually behaved in the way that it should during this market uncertainty as the truly global and only tradable, the most useful asset that is out there. So realistically, was it volatile? I don't think so. We actually saw the fact that for one of the only times ever that the Bitcoin's volatility was actually less pronounced than traditional equities. If we move along on the month, there were a lot of different topics, a lot of trade deal discussions, which are obviously still undergoing. These will take a long period of time. But over the last week, we saw a reignition in risk on sentiment. We saw gold actually take a little bit of a dive from all-time highs of around 3.5K, and Bitcoin actually was the main benefiter, and it really decoupled from stocks, benefiting a lot more than the stock market actually had done. And I think this points again to the fact that maybe risk on sentiment is slowly coming back to the markets. Matt, maybe you can tell us about the ETF flows that we're seeing in this period of time as well. They kind of point to a similar picture, I think.
100%. Like in that previous chart that you had up, it showed like Bitcoin decoupled away from the traditional stock market around the April 10th, April 11th timeframe. And that's exactly what we saw in the ETF flows, right? Bitcoin is an interesting asset. It's like a hybrid asset. At times during risk on, it trades like a NASDAQ, but in times of risk off, people really see it as a flight to quality and a flight to safety. And that's pretty much what we see here at the beginning of the month. The Bitcoin ETP suite saw assets coming out of the ETP, but then once Bitcoin was seen as a flight to safety, a flight to quality during times of risk off, so such as Liberation Day, we saw the flows really pick up. And something else that is pretty cool about this chart is that we see that when flows are coming out of Bitcoin, they're going into the gold ETFs, but the same thing holds true in reverse as well. During days where the gold ETFs saw massive, huge, multi-billion dollars of flows coming out, it seems like those flows went into the Bitcoin ETFs. And so that's what this chart shows. And it's super cool to see that, as we saw during the whole February, March 2023 regional banking crisis in the US, where Bitcoin went from 15K to about 23K, as people saw it as a flight to safety, flight to quality. We're really seeing that now during Liberation Day, and it's showing as a true flight to safety, flight to quality. And it's truly just decoupling away from the equity market, which is what we love to see.
No, exactly. It's a good point. And to add, I think this slide is really interesting to add to what you mentioned as Bitcoin being a very unique asset and maybe one of the only ones that has this kind of double nature a bit as a risk off and a risk on asset. And you can see that with the 7-day rolling correlations over this year so far. At the beginning of the year, we of course had more favorable market conditions. And here you can see that the correlation from Bitcoin to gold, which is in yellow, actually came down significantly, whereas its correlation with other equities like the S&P or tech equities had actually increased throughout this period of time. And on the flip side, recently, when we actually saw some market uncertainty, its correlation with gold picked up significantly, and it actually decoupled from risk on equities. So that's quite an impressive nature. And this is exactly why we think Bitcoin should be a part of anyone's portfolio. It's a truly unique asset, and it's the only one that shows these tendencies. And of course, I know this chart looks really noisy, and it actually is, but it shows also that Bitcoin doesn't have a strong correlation actually to any asset. And as a result, to add it to your portfolio, it's a true option to diversify your risk. Cool. That brings me to the next slide, where we're actually going to make a prediction this time around. And Matt and I and the wider team here, we do think that Bitcoin is poised to potentially outperform both gold and equities in this quarter. The first thing that I'd like to note here is that we see this chart with a Bitcoin to gold performance, essentially showing the Bitcoin to gold ratio. And what we noticed is actually over time, one thing that you see is it consistently forms higher lows. And that's something that is a direct result of Bitcoin's kind of appreciation over a long period of time. But over here recently, we've actually seen the higher lows form significantly higher ladders, which is quite impressive. And we think that given that risk on sentiment is starting to return to markets and Bitcoin again benefits from this, whereas gold actually does not, we do think that Bitcoin will outperform. Of course, that's not to say that there won't be any uncertainty in markets. We've seen how choppy it has been in the first quarter. But again, Bitcoin, if uncertainty returns, does stand to benefit because some people, I believe, are slowly starting to see it really as this emerging store of value, which is again what we saw throughout Bitcoin's performance this month. Cool. The world never sleeps, especially the crypto world. And aside from price action, there's been a number of quite exciting and new developments in the crypto space. Of course, like always, I think Strategy kept announcing more Bitcoin acquisitions throughout the month. I think last week they added another $1.4 billion worth of Bitcoin to their treasury. And it just shows, it reinforces their position as the top corporate Bitcoin holder. But they're not the only ones, and there's going to be more coming, and we're seeing this with more strategy-esque acquisitions. And one of the ones that there's many of these already going around. We've seen Metaplanet continue to add to their stash as well. I think they now hold 400 million. But the most interesting one that we pointed out for this month is the launch of 21. It's funny, they're not actually related to 21 shares, but imitation is a great form of flattery, so great name. But aside from that, it's a really big development because it's essentially it's an acquisition, a BTC acquisition firm primarily, but they're actually backed by SoftBank, Tether, but also Cantor Fitzgerald. Sorry for the mispronunciation there. But Cantor Fitzgerald is actually led by Howard Lutnick, which is the US Secretary of Commerce. So this shows that this is quite a big development, and it's not just any other firm. Not only that, but they're actually going to launch with around 42K Bitcoin, which I think, if I'm not mistaken, would already make them the second largest corporate coin holders. So that's quite a big development here. And I think Matt wants to add something because not only are they going to be acquiring Bitcoin, but I think they're also going to be running or developing some Bitcoin software. So maybe you could add something here.
Yeah. So like on top of that, not only are they trying to acquire Bitcoin just as MicroStrategy and MicroStrategy have done, but they'll also on top of that as a way to gain even more revenue and offer additional Bitcoin products. They're going to be creating additional Bitcoin products, such as a product that might offer you a 7, 8, 10% yield on your Bitcoin using various different strategies, as well as some software that can be applied to your Bitcoin to also use some other different trading strategies and whatnot. And Jack Mallers is actually the CEO of Strike, who is one of the leading developers on the Lightning Network. So he has years and years of experience with Bitcoin's layer 2s and such. So this will add an additional revenue source to 21 Capital and really differentiate them from some of the other type of Bitcoin acquisition strategies that was seeing out there. So there's a huge development and something we should keep an eye on. And as Max mentioned, even though they were starting off with 42K Bitcoin, that already puts them at the top 5 of companies holding Bitcoin. And they're not going to be stopping at 42,000 Bitcoin. They're going to keep on trying to acquire more and more. So this is just the beginning for them.
Yeah, thanks, Matt. And that brings me a bit to my next story because I think the next story is potentially a development of what we're seeing with all these acquisitions. And that's that we may be starting to see the first or the big or the first large scale implementation of Bitcoin collateralized loans. And that's through Riot Platforms and Coinbase. So Riot Platforms, they entered a 100 million credit agreement with Coinbase, and they'll be using their Bitcoin stash, which is around, I think, 19K Bitcoin, which is around $1.8 billion, to use as collateral, which is a great development. And we really think that this represents the next evolution of Bitcoin treasury management because it lets these companies leverage their Bitcoin for large scale capital. And not only that, but capital that's actually non-dilutive. So it really turns Bitcoin from a static asset, one that people can hold because of their belief in the network, to one that can actually be a dynamic and a liquid source of corporate capital and financing without having to sell your Bitcoin. And I think the bet is just a long-term inherent bet that as Bitcoin appreciates against the dollar, the effective cost of these loans decrease over time. So it's quite an exciting development, and I think it does accelerate Bitcoin's usability. So that's just quite an exciting development. I think we should definitely be keeping an eye on here. And maybe Matt, you can talk about the last point. I think we saw this earlier this week that Arizona looks potentially poised to be the first state to actually pass a reserve of sorts or pass a bill to allow them to build a reserve. So what are you seeing here?
Yeah, so currently right now, the Arizona State Bitcoin Reserve bill is at the final stage. It's up to the governor of Arizona to approve the bill, and it's looking that he likely will. So once that happens, the state could allocate 10% of essentially their yearly funding that they use to acquire more and more assets to Bitcoin. So at the time, their portfolio is about 30 billion, so 10% would put that at about 3 to 4 billion. So that's 3 to 4 billion of Bitcoin that will be acquired by Arizona if this gets approved. So that's huge. And to touch on Max's last point of Bitcoin collateralized loans,
Yep.
we're seeing more and more, not only countries, but state level as well as huge companies trying to get some Bitcoin. And for companies that are not allowed to hold Bitcoin, actually, these different Bitcoin loans or Bitcoin line of credit is a great way to them to get some underlying exposure to Bitcoin. And so this just amplitudes the amount of buyers for Bitcoin by a large amount. So we should see more and more institutions come in and acquire more Bitcoin in this sense, in that way.
Thanks, Matt. And I'm seeing already some questions in the Q&A. Don't worry, we haven't forgotten about you, but we'll definitely get to these at the end. Cool. So moving on, I think we talked a bit about what we've seen. People are obviously here to also look at what we think we will see. And I think we've took a quick look at the technical analysis, and we believe it points to a near-term breakout to the 100K level. At the early start of the year, we did do a session where we pointed out the fact that on-chain data may be actually heating up. We didn't necessarily, and we still don't think that was a cycle top, but we did see that we may potentially return to lower levels. And this happened, as you can see from the chart moving downwards, was mostly macro driven. But we did then again point to the fact that because of this market uncertainty that was affecting all asset classes, we may actually be testing the bottom, the 72K bottom, which we had actually flagged as a key risk here. But we also mentioned it was a historical buying opportunity. And the benefit here is that we actually didn't see Bitcoin break down below the 72K level. It actually held firmly strong, which is another point to the growing conviction that people have in acquiring Bitcoin, even during market uncertainty. We then broke a kind of neckline resistance around 87K, which is now broken, and we now sit firmly above these key moving averages, the 50, the 200, and the 100 as well. So these formerly resistance levels, these moving averages, will now actually flip to support. We're seeing some resistance at the 95K mark. Also, I think the GDP numbers just came out in the US, which pushed us around 94K back down. But we do think that we will break the 100K mark in the near term, provided that we do get some favorable economic data as well. Now, moving on, of course, the crypto industry is not just Bitcoin, it makes up a large part of it still, but there is a world beyond that. And we actually saw that altcoins rebounded quite strongly on the resurgence of risk appetite. If we start with the blue line, which you can see is Ethereum, it rebounded alongside the broader market strength. But truth be told, it was largely reclaiming the losses from early April. But there is a little bit of a kind of silver lining. We actually saw a record 450K ETH flowing into accumulation addresses last week, which are addresses that typically accumulate ETH and don't tend to sell it off. And active addresses actually rose by 10%. But the truth is that ETH still continues to struggle with scaling being a main bottleneck. But on that front, we actually have the Pectra upgrade scheduled for next week, which is aimed at improving some of this transaction efficiency and help with account abstraction and whatnot. So this may also be a near-term catalyst. Moving on to Solana. Solana actually over the month had seen some strategy-esque acquisitions actually, so I think Upexi announced that they'll be making an 100 million investment into Sol and start acquiring it as a kind of treasury asset, I guess. Not only that, but we actually saw Galaxy switch, I think, 100 mil of their ETH into Sol. So it shows what we had been highlighting, that this year for Solana, it's going to be a strong year. And it's also had a tick up in its DeFi activity. Most of this was driven by more speculative behavior. It's showing strong momentum. If we look at Sui, Sui is the black line over here, and this one was quite an outlier in the last week. I think it's up around 63% in the past 2 weeks and has now climbed to levels we saw in early February, just before the market started turning. On-chain activity points to the fact that DEX, or decentralized exchange, volumes are skyrocketing. We have around 177% increase in DEX activity, which have pushed DEX volumes to around the million mark. Stablecoin supply continues to grow and has nearly doubled. So there's a lot of benefits coming on in the Sui ecosystem in terms of on-chain data. But we're actually seeing also some exciting developments outside of the data. So firstly, they have announced a MasterCard partnership, which is very exciting because it allows people to, across Europe, I think, to spend crypto like they would cash, and it grows the kind of utility for the Sui ecosystem. And there are also some speculation around a potential Pokemon collaboration stemming from Miston Labs' acquisition of Parasol Technologies. This was also seen in a Sui blog post that has since been edited, but nevertheless points to the fact that Sui is making inroads in the kind of consumer-facing or blockchain gaming world. And if they were to acquire one or make a partnership with one of the most iconic franchises worldwide, it would be a significant step forward. But these charts and then this price action just again makes me question one thing. We do see the Sui chart quite often for different assets at different times. So what we're not seeing, though, is a broad resurgence of altcoins. It seems to me that we see momentary glimpses of different assets rallying. And so really the question remains, Where are alts, Matt? And I think we had done a research report this week on the missing alt season. If you guys haven't checked it out, please do go do. But nevertheless, we're going to break it down as to why we think alts haven't been misperforming over the last cycle. So, with that being said, we've seen Bitcoin significantly decouple from the wider market, and you can see that here with the Bitcoin market cap and the crypto market cap. Fact is, we typically see altcoins follow the trajectory of Bitcoin, but this is something that's not happened yet this season. So maybe Matt, you can actually give us a little bit of explanation over what does a typical altcoin season look like?
Yeah, 100%. So let's go back to 2020. COVID had just hit. We were all stuck inside. Some of us may have been doing work. Some of us may have been in college. Some of us may have been trading certain crypto assets and other name stocks on the side, right? Like Max, you probably got into crypto around like 2020, 2021, right? Yeah, a lot of my friends did as well. And as more than likely, a lot of people listening to this call did, right? So during the last alt season, which was 2020, 2022, we saw Bitcoin surge ahead of the alts by quite a lot in the beginning of the season. So leading into the Bitcoin halving, I believe that year the halving occurred in May as opposed to April like this year. So on May 2020, the Bitcoin halving happened, and we saw Bitcoin surge at the end of the year, hitting new all-time highs, breaking old 20K all-time high. And we saw Bitcoin lead the market for about a year, and then boom, once altcoins started taking off, they took off in a long way. We saw the Bitcoin dominance, which is essentially Bitcoin's market cap divided by the total crypto market cap. We saw that go from about the 70 range, the high 60s, low 70s, all the way down to the high 30s, low 40s. And we saw it stay there for a long time. So to give you a little perspective, right now, Bitcoin dominance is at about 61. And from about January of this year to about now, the lowest it's been was like the high full 40s, but that was for like maybe one or 2 days, so not for very long. Went down to the high 50s, the high 40s, low 50s, and immediately went back up to the 60s. That's not what we saw in the last cycle. And that's why we're saying there is no alt season, any true alt season like there was last cycle. Last cycle, Bitcoin dominance went from 60s straight to the low 50s. And when it hit there, it just kept on going down. It went all the way down to the low 40s. And we haven't seen that this cycle, right? So last cycle, it was in the low 40s and it stayed there basically the whole entire cycle. So this is what a typical altcoin season looks like. Bitcoin is outperforming altcoins in the beginning. And then once Bitcoin capital starts to get exhausted in a way, flows start to go into the altcoins. And that's truly what we saw in 2020, 2022. And we thought we saw that for a little bit this year, at the end of last year, beginning of this year. But Bitcoin quickly took the narrative in the crypto cycle.
Thanks, Matt. And I think some people here would be thinking, okay, maybe it's a little bit of the market downturn that actually meant that we didn't see an alt season. Because as you said, we saw that slowly starting to brew at the end of last year, beginning of this year. And then, of course, we got some macro uncertainty. But we actually pinpointed, I think, a couple of other reasons why we're not seeing an altcoin season. And I think the main one is this chart itself. It's the fact that we have an oversupply of tokens in the market. We have a sheer number of tokens in the market. Right now, I think we have around 42 million tokens. And I think the main reason for that is it's because it's become far easier to launch tokens. You have now platforms like Pump.fun on Solana, which make token creation so much more accessible. We even saw, I think, around 10,000 tokens being created daily on that platform alone. And to just compare to every other market cycle before, in 2017, there were just a total of 13,000 tokens. Next bull run around 2021, we had around 2 million tokens. Now we have 21 times that number of tokens. And so essentially what that means is that a lot of this attention, a lot of investors' capital tends to be divided amongst all of these projects. There's just so much going on, and capital is only limited. Yes, we're seeing more capital flow into the ecosystem, but it's still being divided by a much bigger number. And so as a result, we actually see that there's an abundance of investment opportunities. And as a result, market interest becomes quite diluted across all of these opportunities.
Yeah, to Max's point, right? During the last altcoin season, we saw capital flow from Bitcoin, then to Ethereum, then to the mid-cap crypto. So at that time, it was your Solanas, your XRPs, your Cardanos. And then we saw it flow to the small caps. This cycle, we're not seeing that. And a large reason is because of this high float, low fully diluted value narrative. And what that means is a lot of brand new tokens are launching with a very high market cap, but the circulating supply is very low. We've seen coins launch with a 10% or 15% circulating supply, but a tens of billions of dollars market cap. And so because of that, as these tokens start to unlock, so there is more circulating supply coming into the market, we're seeing these investors, as these tokens unlock, start to sell off their tokens. And since the demand for these tokens isn't very high, as soon as this new wave of supply enters the market, we see a mismatch between supply and demand. And because of that, the price of these tokens are just dropping significantly, right? So as this chart shows, many of the tokens that have launched this cycle are down 90-ish%. And a lot of that is because of this supply-demand mismatch due to high circulating supplies, but very low flow. And this kind of leads into the following point, which is exactly that. So looking back at previous cycles, we saw a massive wave of token unlocks during this cycle, but not during the last cycle. And what token unlocks means, and I touched this in this last slide, is that tokens are unlocking, which means they are coming out of the lock supply into the circulating supply. And in 2022, we saw about $9 billion of token unlocks, whereas in 2025, we're going to see about $36 billion of token unlocks. And due to this supply-demand mismatch, there just is not enough demand to go and purchase $26 billion of new supply entering the market. So that's a large reason why we haven't seen this large altcoin surge like we have seen in previous cycles.
Yeah, thanks a lot, Matt. That was really insightful. And it's a bit frustrating, but it's also linked to this point. It's linked to the fact market share, market attention, and narratives altogether are shifting really quickly. In past cycles, like I think to the cycle of 2021 and 2022, which was roundabout when I was starting to get formally involved, was we saw a DeFi summer. We saw NFTs have their moment, and not just for a short burst of time, but for many months. And today, these hype cycles are a lot shorter, and they catch fire and become the next big thing, and then the attention of investors is rapidly shifted to other investment opportunities. And so this makes it really challenging for investors to have long-term conviction for a narrative, for a sector, and instead they just forced to consistently chase short-term opportunities. And the chart here shows this as well. This is the mindshare change over the last 90 days. And it shows completely different results depending on the market vertical. And that's not something that I think we had in previous cycles either. But Matt, maybe for investors, they're looking for, or for people on the call who are looking for a little bit of insight into what we think exciting narratives are for 2025, what would you point them towards?
Yeah, so firstly, I would say stablecoins are going to be a huge narrative going forward. Now, the hard thing is it's hard to gain exposure to stablecoins, right? I guess the only exposure you can get is the underlying blockchains, which these stablecoin transactions are actually occurring on, since the revenue from these transactions go to underlying blockchains. But that's not really a pure play. But what exactly are stablecoins? They're just tokenized fiat currency put on the blockchain. And tokenized assets is something that we see going forward as being a huge narrative going into 2025 and 2026, as we see more traditional finance firms come on chain and see the operational efficiencies of using a blockchain as opposed to traditional finance methods for sending and acquiring stocks and bonds and so on. So real-world assets / tokenization is a sector we see that's going to have huge performance. And with that comes decentralized finance, because these tokenized assets, they will be used in decentralized finance. And so that's another huge sector we see going forward. And as time goes on, we've seen this layer one premium come down. And the layer one premium is essentially layer ones are valued at a higher market cap than the rest of the sectors, just because a lot of the transactions that happen on these layer ones, a lot of these revenues from these decentralized apps, they go to the underlying layer one. So we've seen that layer one premium, and we think we're likely going to see that, not as much as in previous cycles, but the premium will still be there. So those are some huge sectors that I would keep an eye on going forward. And just to top it off as like a kind of a way of potentially acquiring more alpha, we see artificial intelligence and deepen being two other sectors that are likely going to play out as time goes on. Now, these are higher risk sectors, way higher risk than decentralized finance, for example. But with the higher risk comes high reward. And as we've seen, the narrative of these has come down. These were two sectors that were huge at the end of 2024, beginning of 2025. And we've seen it come down. So this may be a good buy to dip opportunity going forward in those sectors.
Cool. Thanks a lot, Matt. And I think the last one and the final kind of reason why we're potentially not seeing the same type of season this time around is the fact that, yeah, ETPs and ETFs seem to be also locking away liquidity from the on-chain ecosystem. And you can see this also with the chart below, which is total value locked on-chain, has come actually down since the 2021 peak. While, of course, the value or Bitcoin itself has grown significantly. And a lot of this is due to the fact that we had a major launch at the start of last year with the ETFs in the US. And a lot of this means that capital is now locked into these vehicles. It's locked into these structures. Previously, for other investors who may be invested via centralized exchanges, for example, could easily then switch their Bitcoin into other assets. Now, due to the fact that they may be locked into these structures, makes it a little bit harder to rotate your assets across the crypto ecosystem.
And I think something else to add to that is during 2021, we saw the global interest rates basically at near zero. So people went on chain to get high, low risk yields. And with yields going down across the globe, with the Federal Reserve in the US looking to lower rates to about 3.5% by the end of the year, we're likely going to see that continue on and maybe go to a 2% terminal rate. And that will probably make more people go on chain looking for higher yield, and especially as we mentioned, as these various tokenized assets come on chain, like private credit, for example, that should drive more on chain usage going forward.
Cool. Thanks a lot, Matt. Now, after we've unpacked it all, and people are probably thinking, okay, there's reasons we don't have an altcoin season, but what could spark a new one, or what could spark the start of an altcoin season? Maybe you can unpack these. Let's keep it quite brief here.
Yeah.
Maybe unpack, what do we mean by all these 4 points? Maybe let's start with the token launches via community sales. How would that bring an altcoin season, for example?
Yeah, so we mentioned this high float, low FD, bigger reason why we haven't seen a true altcoin season. And we're seeing new projects come out and try to get rid of that problem by having fair launch sales. So where, as opposed to previously, a lot of the supply was sold to venture capitalists and other private investors, now it's being sold to the community. So in that sense, it's a fair launch. And once that happens, we should see these tokens come out actually with, instead of a very low circulating supply, a high circulating supply, and having more retail participation in these tokens as well, because of the fact that it's a fair launch and they're able to acquire it the same time as these venture capital firms are. So that's one way how we'll see this problem get solved. And then the new liquidity entering the crypto market. So that goes on to the point that I just touched on in the previous slide. As the interest rates across the globe start coming down, we're going to see people want to get higher yield, and that leads to a point of people coming on chain to seek higher yield, and especially, as I mentioned, like private credit, which usually offers about 10% yield, comes on chain. Private credit being on chain, being tokenized, gives everyone around the world access to that yield. And then on top of that, as we've seen previously, as the interest rates across the globe come down, we see the M2 money supply go higher and higher. And as we saw in previous cycles, as M2 supply gets higher, more money comes into crypto. And that's because people are looking to generate more and more of a return on their free capital, since lower interest rates means more liquidity in the market because you can borrow money at a lower rate. And because of that, you want a high return on your free capital. And so we should see some more risk on spit come on and see that capital go into the crypto markets. And then, of course, in the next point, meme coin mania, we think we saw the peak of meme coin mania this cycle. That's not to say that we won't see certain tokens within the meme sector do well per se, but we're likely seeing a flow to more community-driven tokens into a more fundamental value of tokens. So tokens with actual real use cases.
Yeah, I'm gonna actually add a little bit onto there because I think to clarify, I think here we mean we've seen a slowdown of these kind of more predatory token plays, launches that are perhaps draining or siphoning liquidity away from investors themselves. We do still think that the sector as a whole, of course, they're all built differently. Not every meme coin is the same, but the crypto space, if we're being honest, is still largely driven by speculative plays at times. And as a result, we don't necessarily think that meme coins will go away at all. We've seen many of them actually develop into sound projects. But your point being true, that we do think that attention is slowly starting to shift onto other verticals.
Something else, it's like just because something starts as a meme coin, it could evolve into what we've seen as a community token, where there's a super strong underlying community which is investing in the token and making real world use cases for these tokens. So a lot of meme coins usually evolve into community tokens.
Cool. And then I think the last one, again, is on the topic. We've discussed this a lot already through our previous sessions, but it's that, yeah, clear regulation could, of course, reignite interest. We've known the fact that the US administration is pro-crypto. They're working towards that. We now have a new SEC chair, Paul Atkins, of course, but there's also, we think that a clear regulation here will lead to investors exploring these ecosystems just beyond what we've seen them explore now, which is really limited to coin, if we're being honest, especially this cycle. Cool. Thanks a lot, everyone. I think that's it for this session. I'm just going to quickly put the QR code there as well, because we, of course, produce a lot of good content on our website, quarterly reports, weekly market updates, and also ad hoc reports like this altcoin season report that we wrote last week. So please feel free to, join our research and sign up to it. With that being said, I think it's now time for Q&A. What's our analysis for ETH peak in 2025? Unfortunately, we don't necessarily give price targets on here. That's not in our scope. But we do run multiple valuation models that you can also find online. We run a kind of discounted cash flow for Ethereum, which points to where we could see ETH's value in 2025. To me, at a high level, if we look at the levels that the Fibonacci patterns are tracing from bottom to bottom, do I think that these levels are a possibility in this cycle? So between 5.8K to 8.5K, I would personally say that this is a little bit on the bullish side, if we're being honest. We've seen that Ethereum, in terms of fundamentals, is struggling a little bit. A lot of activity is siphoned to layer 2 ecosystems. But at the same time, there may be some short-term catalysts if Pectra goes smoothly. But I would say the kind of band range from 5.8K to 8.5K is a little bit bullish, in my opinion.
Yeah, and just to give a little sneak peek into our valuation framework for ETH that we have coming out soon. Of course, we do this on every single quarter, so you could go back and look at our valuation report from Q4 2024. But the one for this past quarter shows ETH being valued higher than it currently is. Let's just say that. So there is a chance for ETH, and we're seeing the Ethereum Foundation play a more active role in Ethereum now. So that should also help clarify some things on the Ethereum front, as the Ethereum Foundation previously has kept silent and been hands-off. Now that they're more hands-on, that should be a benefit for ETH, as well as ETH's price action. And then, of course, the Pectra upgrade. And then there's been various other upgrades that are on the table for the upcoming 4 or 5 year outlook. But as Max said, we don't give exact price targets. But in my opinion, I believe ETH will be higher than what it currently is.
Thanks a lot, Matt. And then we got a question again, would that order still be relevant in today's times? I think that was with regards to the kind of capital rotation that we typically see from cycle to cycle. And I guess we answered that throughout the presentation that it doesn't seem to be playing out in this type of pattern this time around. Then we have a question on, could it be an up together, all of them once? Again, I think related to altcoin season. Again, I think our presentation highlighted the fact that we don't think that we will see a kind of up together all at once situation, and it will be more driven by specific narratives at play. Matt, let me know if you want to add anything here.
Yeah, I completely agree with that. We've already seen it in the previous year where one sector would pump and then the next sector would pump. So we're seeing as these sectors develop true use cases, we're seeing flows into those sectors as those use cases become more and more, I guess, obvious. And because of this, we think that we're entering a point of crypto where crypto is showing its real world use cases. And so because of that, we're going to see these sectors rotate not all at once, but separately because these real world use cases are actually showing now. So we believe it'll be more of a sector rotation as opposed to a up all at once.
Thank you, Matt. And I think the next one is a question on M2 measurements. It says the M2 measure is closely linked to commercial banks, but today those banks represent only a small part of the overall picture. Global liquidity is far more dependent on shadow banking activity like hedge funds. And with that in mind, how important is M2? And what other indicator can we use to capture global liquidity?
We actually touch on this on the Altcoin research report, which Max mentioned. So I would take a look at that. But just to give a brief answer to this question, we think as M2 continues to go higher, and we mentioned this in the presentation as well, as M2 continues to grow, we're going to see liquidity come back into not only crypto stocks, bonds, and such, and all types of assets. So yes, for short answer, M2 seems to have a correlation with the global asset prices, not only crypto, but just all assets.
Thanks a lot, Matt. Then we have a comment from Kuma Warrior. I'm not sure I can say the second word or we get altcoins have become not so good coins in today's times is how I'm going to rephrase it. I don't want to get shadow banned on YouTube when this goes up. But I think this points again to what we mentioned throughout the call, that a lot of these altcoins, especially the ones that have come out throughout this cycle, are low initial float and high FDV, which again to us leads to significant investor dilution. And so from an investment perspective, a majority of them have underperformed, yes.
And we also have a quick question on what do we mean by cycle. I realize we mentioned cycle a lot during this, but we haven't exactly defined what that means. Crypto works in these 4-year cycles. So 4 years after the Bitcoin halving, that is one cycle. So for this cycle, it would be from 2024 to 2028. And the previous cycle was 2020 to 2024. But in these Bitcoin cycles, we see a lot of the price action occur in the first 2 years of the cycle. So for this cycle, if it follows previous cycles, which it likely won't just for a lot of reasons, but we should see a lot of price action occur in 2024 through 2026.
Thanks, Matt. Yeah, definitely should have clarified that, but I hope that clears the question. Cool. Agreed. Conviction play is missing for a lot of these assets, and that is a direct result as to why we're not seeing a broad altcoin market. And then another question from Kuma Warrior. What's been your value-driven points that made Doge being opted at institutional levels? Is it the age of the token? Is it what's being built around Doge meme, the wallet, potential integration with X, and that puts it at par with a serious crypto asset? And I would just start by saying that Doge, in our view, is a serious crypto asset. I think we've put out a lot of material on this topic recently. And again, feel free to check it out on our website. But there's many reasons for why we actually think that Doge actually does have value. Firstly, we have to then uncover the whole meme coin sector. Again, they're not all built equal, but we do believe that meme coins represent internet native value that can then be traded upon by investors. And Doge specifically has an extremely long kind of track record of 10 plus years, which is a significant time in the crypto market where we've seen a significant number of projects come up and wash away. That hasn't happened to Doge. Doge is also an asset that's completely unique in terms of performance, every cycle forming higher lows. And also, not only that, but is quite uncorrelated to both traditional and crypto markets. Aside from all these kind of more performance angles, we've also seen its utility become a little bit more advanced, right? We're seeing real world payments, we're seeing real world integrations. And so I think a lot of it will be answered in a lot of the research reports that we've put out on the topic of Dogecoin, but it's many of the things that you touch upon here. All right. Then we have another question on ETPs and ETFs locking away liquidity would then make BTC more volatile. So a potential correction from 100 to 10K could be possible if an upcoming bear market could be forecasted. For the first one, I would say it actually makes it less volatile, but I would let Matt maybe take this question.
No, I 100% agree. It makes it a little less volatility. So ETFs in general, the flows into those products are very sticky. This is what we've seen over 30, 40 years of ETF history. So usually flows go in, but they don't necessarily go out. And if they do, it's not in these large portions. So obviously I can't tell the future, but I do not think Bitcoin has a chance to correct to 10K, and that's because the flows into ETFs reducing volatility. And that's what we've seen actually. If you look at the volatility from Bitcoin since the launch of the ETFs, it's just come down. At one point, this was a 70 vol asset. Now it's a 30, 20, 40 volatility asset, depending on the time. And at times, actually has less volatility than these large products like the S&P 500, the Nasdaq 100 and such. So I don't think a 10K correction is possible, but of course, I can't tell the future and anything could happen. The probability is not zero, but I'd say it's a pretty low probability.
Yeah, agreed. The fact that these ETFs not only attract capital, but they also attract attention. And now Bitcoin is really at the mainstream in terms of attention. And so there's a lot more hands that would purchase it at discounted values. So I really don't foresee a correction from 100 to 10K unless something goes fundamentally wrong with Bitcoin itself, which we don't believe to be the case. Cool.
Right.
What role do you feel meme coin? A lot of meme coins topic, which is quite funny because we didn't actually really mention it throughout this presentation, but I'm glad to see that it's catching your attention. But yeah, what role do we see them play in the crypto field? Could they become a wrapper of top-notch technology and present it in a friendly and entertaining way? In some sense, could they be a layer of abstraction where they focus on idea and mission, while those willing to learn how the clock ticks could delve deeper and help development in a true community-driven fashion? So firstly, I think you touch upon a few of the reasons why, in terms of the role that we think meme coins play in the crypto field. We could go on here, especially me. I think I could go on for quite some time here. But really, at a high level, what we see meme coins is really the tokenization of internet cultures. And for younger generations, I think this is a little bit more graspable. We've spent our time online. We've formed friendships online and real people that we have connections with online. And in truth, a lot of this happened via the internet and via memes. I remember sharing this with friends online after school and whatnot. And memes really are the internet's kind of native language. It's borderless. Everyone can understand. And as a result, I think it was only time before these turned from pixels to tokens and actually allowed users to capture value in the content that they share and create. So one example I would add is that historically, a lot of the value capture from internet communities is still captured by centralized players or centralized media platforms like Facebook, Instagram, and whatnot. And now meme coins allow this to be fully captured by the community. And that's why we think they're not all built equal. Some of these are predatory plays, but as a whole, we see them as a kind of tokenization of internet culture.
Exactly.
To your point, could be a wrapper of top-notch technology, could be a way to raise capital to then build into something more mature, if you will. So plenty of reasons, and we also have a lot of this research on our website in case you're interested.
Yeah, I think memes are a great wrapper for community. And to just mention a quick stat, I mentioned, as Max said, the millennial and Gen Z crowd tends to like memes. And actually, about 85% of millennial and Gen Z investors are actually invested into crypto. So as that number gets larger, as we see this large transfer of wealth that we're going to see in this next generation, we're likely going to see meme coins become more and more popular.
Thank you, Kumo, for your kind words. We always appreciate seeing people enjoy our research. So much appreciated, and we hope you see you next time as well. And then we have a question on, will you be launching an altcoin ETF? So no holdings of Bitcoin and ETH in it. Again, here we are constrained. Of course, we're not able to provide any insights into our 21 shares operations. And also, we would not be able to name product names, even if we wanted to. Unfortunately, gonna have to park that one. Do we see a potential altcoin following the steps of ETH and Sol back in the days, and under which conditions? What about Sui, for example? I know 21 Shares likes it. We do like Sui. Yeah, we do Sui. And to your point, I would say that every kind of cycle has a regime leader, if you will. We've seen Bitcoin was the first one. Of course, it was, if not the only one of the only crypto assets at the time. Then came Ethereum, housing a host of ICOs, and it really used that to become that regime leader. Recently, we saw Solana boosted by meme coin activity, user-friendly features, but also thanks to its kind of speed and low costs. And now we have Sui. And in our view, Sui does have the potential to really follow a similar trajectory to the altcoins you mentioned. There's many reasons for it. Firstly, we see developers really flocking to the network and building out a lot of different toolings in the core ecosystem, but also in sub-ecosystems. We're seeing user activity significantly jump. I think over the last 2 weeks, we've seen an average, correct me if I'm wrong, Matt, but around 1 or 2 million new daily users, new wallets being created on the Sui blockchain. DeFi activities picking up. All in all, we are really quite bullish on Sui as a long-term potential. We think it has several user-friendly features that make using blockchain technology feel like you're using just any traditional platform or application. And so as a result, we are quite bullish on Sui, yes. Matt, maybe you could add something here as well.
Yeah, so just to briefly add to that. So Solana launched in 2020, and it had some nascent DeFi activity as well as on-chain users until 2021. And we're actually seeing a very similar pattern play out with Sui launched in 2023. It had some nascent activity, but last year we saw the flows on Sui's DeFi jump. We saw TVL, I think at the peak reached like 2 or 3 billion. Right now it's like at 1.5 billion, which is still quite high for a project that's only been out for a year and a half, 2 years or so. So when you put a chart of Sui up against Solana in terms of like active users as well as DeFi TVL, it seems to be playing out a very similar pattern to what Solana did back in 2020, 2021, 2022.
And I think it's always important to carve a niche as well. We know, especially with the kind of foundational level crypto assets, your likes of Ethereum, Solana, your platforms for innovation, it's important to carve out a niche. Solana has carved out their niche in our view. Ethereum is carving out their niche. They're the home of tokenization and becoming kind of Wall Street's chain. And in our view, Sui has the potential to really become the platform for kind of consumer-facing apps. Just to give, I think, a couple stats, they announced the Sui Play, which is a handheld device, brings blockchain really to your fingertips, quite literally. And that is to help develop their kind of gaming vertical. And it's a vertical that hasn't been successfully tackled as of yet. And given the fact that there's rumors with Pokemon, they have not only blockchain games on their device, but also existing titles, which will attract users. We think if blockchain gaming kicks off as well, or has its moment, that Sui would be well positioned here as well. And then another question, thank you, Eduardo, for your questions, of course. What about tokens related to stablecoin ecosystems? Thinking about Curve on Curve Finance, do we see any potential here?
Yeah, I think Curve is a great example, as well as Maker, which rebranded to Sky, and now it's kind of rebranding back to Maker. But that's also a great example of a platform that is likely going to definitely benefit from this new stablecoin ecosystem, as well as different layer one networks, right? So Tron, for example, a lot of stablecoin transactions happen on Tron, and then of course Solana is seeing a growing use case with stablecoin usage with Solana Pay and different companies using Solana for payment methods. So those are a couple of platforms that are definitely going to benefit, and of course there's the whole suite of real world asset tokens that are also looking to benefit from this.
One last question, of course, we always happy to answer. Hyperledger. Matt, what do you know about Hyperledger?
Honestly, I am a little bit unfamiliar with Hyperledger. I know there is a private DeFi company called Hyperledger. I'm not sure if that's the one that's being referred to here.
In any case, I have the same knowledge as you, Matt, but we'll be more than happy to answer. Could be Hyperliquid that they're talking about. That's a
If
good
it,
point.
if they talk about Hyperliquid, yeah, Hyperliquid is huge. Yes, Hyperliquid is also likely going to be a huge layer one project going forward. It sees a ton of trading volume in the perpetual contract space. And so we were seeing more and more users use that, as well as they've launched their own smart contract enabled layer one, which will also attract more users. And 95% of the revenue earned on Hyperliquid actually goes back to purchasing the Hyperliquid token. So doing a stock buyback in a sense, which equates to about 500-ish million about 300-ish million of Hyperliquid buybacks each year. And then on top of that, Hyperliquid's price to earnings ratio, which is a very popular TradFi metric to evaluate a company, is actually quite low even for traditional finance measures. It's about 10-ish, 10 to 15, depends. They have about 300 mil of earnings, and their market cap's about 5 million-ish. It goes between 10 and 15. So yes, Hyperliquid fundamentally looks very good in that sense.
Yeah, Kuma, you correctly mentioned that it's the one where we see a lot of whales actually trading. And on crypto Twitter, we actually see different participants try to liquidate these whales. So there's been a lot of activity on Hyperliquid. Do we see a chance for Hype to be the next BNB? I think in terms of kind of architecture and kind of positioning, it's still slightly different, I would argue. But maybe Matt, you can break this down.
Yeah, so they have a very similar token slash stock buyback program as BNB does, but where BNB uses like a small percentage of their revenue to buy back the token, Hyperliquid uses a lot. And as well as the actual Hyperliquid UI, it's honestly one of the cleanest UIs I've ever used and seen, not only in crypto, but also in traditional finance. Like it looks and feels just like using like a Robinhood. So it's very nice. It's very easy to use. It's very intuitive. And as well as I mentioned, it's becoming a smart contract enabled layer one. So for that reason, it's looking like it could be. I can obviously can't tell the future, but it's looking like it's going to set a similar path to what BNB did back in 2020 and such. So there's a chance for Hype to be the next BNB. I don't think it'll grow as large as BNB, just because BNB is like a pioneer in the space. Not only do they do perpetual contracts, they do spot, and their underlying blockchain has been used a lot as well on top of that. But I think Hype will be ICO. I think Hype and Sui are going to be the Solanas of this cycle, but that's just my opinion, of course.
Thanks a lot, everyone. Appreciate the kind words. And as always, hope you guys join again at our next session. Thanks, everyone, and have a good rest of your day, your evening, or your night, depending on where you are. Take care and see you guys.
See everyone.